all knew what was going on. Anyone on Wall Street, had a sense how it was changing for the worse. They had what they called a culture of excellence. Ultimately, it was a very aggressive banking culture.
Fuck this shit, that cunt, cock, asshole.
I had some real issues with how that was manifesting because around that time there was a lot of corporate fraud that was becoming apparent. My graduate degrees are in statistics and operations research, undergrad in math, so that was always my kind of angle into Wall Street.
When was it time to blow the whistle?
I just decided I was going to leave Wall Street. All this stuff was going on. I didn't want a part of it. And then I found also there was lack of understanding. I just sort of wandered into journalism.
Let's bring in an insider. She is former Goldman Managing Director Nomi Prins.
Real economies throughout the world are deteriorating, and growth is deteriorating, manufacturing is deteriorating, production is deteriorating. We're starting the beginning of a prolonged period now of a recession or even worse.
Odds are shifting very quickly. This could be it.
People don't have the same exposure to the trading systems on Wall Street. So that's what I've done in this particular system that I've developed, something called 25-cent contracts, and presents a way for a person to take advantage of that scenario in a cheap way and in a fast way and in an easy way. The more comfortable you feel with financial elements, the better you'll be at managing them, and the more confident and empowered you'll be in your own life, in any aspect of your life.
Nomi Prins is a former Wall Street trader that you would have seen on Fox, CNBC, and Bloomberg Television News. She actually regularly advises the Federal Reserve, the IMF, and the World Bank on important financial policy matters. She's ex-Goldman, Lehman Brothers, and Bear Stearns, and she really knows her stuff. But what really impressed me was her 25-cent contract strategy, which takes advantage of a little-known market anomaly that happens every day around 10 a.m. if you know what to look for. Now, as the host of this episode, I was able to secure an exclusive spot, but you must act now. And as a former Wall Street trader, I think this is a super exciting strategy for investment. So if you're interested, you can click on the link below or go to londonreal.tv/Nomi, that's N-O-M-I, to secure your spot. I know you're going to enjoy the training, and I know you're going to enjoy this incredible episode with this incredible woman. The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go? This is London Real. I am Brian Rose. My guest today is... This is London Real. I am Brian Rose. My guest today is Nomi Prins, the former Wall Street banker turned investigative journalist, financial expert, and speaker. You have worked at some of the most powerful banks on Wall Street, including Goldman Sachs, Lehman Brothers, and Bear Stearns. You've been a television commentator for the BBC, CNN, and CNBC, and your work as an investigative journalist has been featured in the New York Times, Forbes, and Fortune magazine. You're also a best-selling author with your latest book, Collusion: How Central Bankers Rigged the World, shedding light on the dark conspiracies between private and public banking. Nomi, welcome to London Real.
Thank you so much, Brian. It's so exciting to always be in London, but particularly to be here with you at London Real, because we do share so many background similarities.
I know, and I want to get into all that today. What's it like being in London? I guess for you, being back in London, because you came here for the financial markets even before I did back in '97.
Yeah, actually, I was here from '93 through 2000, so I was here during the initial steps towards the EU, when Britain was talking about what the role would be relative to the rest of Europe, and all the conversations from a trade and market and banking and geopolitical perspective back then. And now we're sort of in a different manifestation of that. with conversations about what's going on in the EU, the economies, Brexit, and so forth. So it's like a bit of a time loop. So every time I come back to London, it's a little bit of a mini time loop. I do get back here several times a year to work on things, but it always feels like coming home. Even though I only lived here 7, 8 years, it always feels like a second home to me.
Yeah, no, I remember that time. Like, people don't remember in the early 90s, no one knew if the euro would happen, if the European Union would happen. It was still like kind of a dream. And all the currencies were all over the place. They all had different interest rates, usually really high. And then they all kind of started converging. Well, I mean, you got to see all that happen. And now some fallout from that happening, right?
Yeah, it's really interesting because back then, like being inside a bank at the time, and I was working for Bear Stearns, but of course being part of banking in general, in the City of London in general, you know, all my friends were in banking. That was all the conversation that was going on. It was convergence trades and what would happen to the European currencies and nations and bond markets when they converged into each other, and how the UK and Britain would be a part of that or not a part of that, and what the sort of thoughts were on all sides. And it's really interesting because back then it was about, okay, what's the trade? As well as what's happening politically. And now that I'm somewhat outside of certainly working within the banking system, it's more like I can be an observer as well in terms of what's going on, and that's really very interesting because some of the same conversations are going on. You know, Brexit is all about, you know, some people not wanting Britain to be a part of the EU, which was exactly the conversation that was going on in the 90s, and some people want it to be, which was exactly the conversation that was going on in the 90s. It's just that all this other life and stuff and events has happened in between.
What do you think is going to happen from here with like Britain, the pound sterling, and all that stuff? I mean, I don't want to get too deep into it, but like, what do you think is going to happen to this country and Europe and all that?
Well, one thing that's happened since the referendum in June 2016 for Brexit is that there's been massive uncertainty, right? There's been political uncertainty. There's been a couple of prime ministers along the way. There have been a lot of economic fallout from the uncertainty around that situation. What's trade going to look like? How are companies going to be able to invest? Where are people going to go? Will they be able to go seamlessly back and forth? You know, particularly in service industries and in airlines and in banking and all these different places. And so that uncertainty is really dragged, I think, on Britain as well as in the streets. I was in Birmingham over the weekend, which is it's where the Industrial Revolution started, like in the world. I mean, it started in Britain, it started in Birmingham, and just in a pub with just, you know, regular local people talking about what was going on. And it's interesting when you get away from newscasters and away from London and away from sort of people that are more sort of talking about things rather than experiencing them on the ground, how things change. And those conversations in Birmingham were very much about the uncertainty surrounding how their lives would be with Brexit, without Brexit. You know, not so much, you know, who in Parliament is doing what, but how does that actually impact their daily lives? Is it going to make the economy harder for them personally? Is it going to be easier? Like, what's happening? And just the drag of it for years has made people very tired on the ground. The not knowing has made people very sort of tired on the ground. And that's one of the reasons, just from a financial perspective, the currency, the pound, has been very depreciated because it doesn't know what it's supposed to do. And as a result, investment doesn't come in here. The pound gets weaker, and that's what's happened. Recently, as there's a possibility that there won't be a Brexit with no deal, that's kind of been filtering throughout the ether, the pound's been increasing a little bit. And that's because the pound wants certainty. The pound doesn't want a crash and burn scenario. The country doesn't really want a crash and burn scenario, despite what some politicians are saying. So my feeling is that there won't be a no-deal Brexit. There might be a Brexit, but there will be some kind of a deal, even if pieces of it are put on the table with the idea that they can be negotiated later, but still put forth as some kind of a deal. Because I just don't think that the integration between Britain and the EU, because there is so much trade, there is so much of an economic connection with those areas, plus with respect to the rest of the world and what their place is, I don't think we have a no-deal Brexit.
You mentioned uncertainty, and that's such a big thing. And we got an election year. We've got always seems like crazy things happen around the world, and oil prices and all these things. And we actually just got done taping a short piece about something you've just come up with, which you call your 25-cent contracts, which I believe is kind of an option play, but you're really a macro person. I'm just wondering if you could maybe explain just briefly what we talked about, and also how does that play into this worldwide volatility? And by the way, we taped that piece. It's not going to be on YouTube or on our website, but there's a link below. It's londonreal.tv/Nomi. That's Nomi if people want to watch it. But what is that all about?
Right, so one of the things that I have done since leaving Wall Street and leaving the banking environment from respect to working for any of those institutions is I've been writing, I've been doing journalism, I've been speaking with governments throughout the world and institutions as to how better they can position themselves to help the real economy, to help like real people on the ground. So my entire sort of focus has changed to be about that, to exposing what's wrong and to also helping people on the ground. And one of the things that I actually realized when I left Wall Street is that, you don't get paid as much, right? I mean, it's very simple. It's like there's a lot of money that's coming into banking positions that one can make, but when you make the decision, as I did, to leave all that, I also want to do my journalism. I want to fund it and things like that. So I look at very carefully at how I've invested the money and protected the money that I've made since then so that it can last me, so that I have the freedom to do journalism, to be a whistleblower and so forth. And that freedom is really important to me. So one of the things that I've developed in this trading system is I've taken sort of the analytical mathy stuff that I did, the wonky stuff that I did.
Which is what your specialty was.
Which is what I did,
I mean,
yes.
You ran these big quant departments, what we call these rocket scientists.
Yes.
I mean, that's why I got recruited at MIT to go to Wall Street at Bankers Trust, because they were looking for these math quants, and you had 30 of them working for you.
Yeah, I mean, in London, they were incredibly gifted intellectually and mathematically and statistically. I myself, my graduate degrees are in statistics and operations research, undergrad in math. So that was always, yes, my kind of angle into Wall Street relative to trading or sales, which was some of the other types of jobs on Wall Street. It was always about the math, the trends, the numbers, the securities, and how they behaved under certain conditions. And that's always what I looked at throughout my entire career on Wall Street. And I always also looked at the downside, not what happens if a trade works, but what happens if it doesn't work? What are the risks you should be looking for, and how can you best sort of protect that investment for those risks? And so that's a lot of what I did. So leaving, I wanted to protect what I had, again, so that I could continue to do what I do and be free to do that and say what I need to say in the world. But also I've realized over the years that people don't have the same exposure to the sort of bigger trading systems on Wall Street. I mean, yes, they might have a brokerage account, but they don't really have the ability to create their own systems. And so I looked at what are some of the ways that I can create something that they can use, like regular people on the ground can use to access some of what Wall Street does all the time. And it's a little bit like swimming. I mean, I'm a diver and stuff. It's a little bit like looking at sharks. And consider Wall Street bankers like sharks, right? I'm sure that's not a big leap. And in the ocean, there are these things called shark scrubbers, right? And they're actually little fish that look exactly like sharks.
Yeah, I've seen
but
them.
they're tiny.
Yeah, they swim alongside of them,
They
right?
swim alongside. They sometimes they actually like suck out the sort of nutrients sometimes from the shark itself, like the sides of the sharks, and they also swim beside them to get those nutrients. So they kind of like shade the shark as the shark's moving around doing its thing, but they're tiny. And so the way I look at systems that can help individual people is that you kind of have to be aware of what the sharks are doing, because they're doing it. They're moving in the market sense, they're moving the markets, but also you can sort of be alongside of them and sort of be observant and sort of extract some of the value from those types of trades, especially when they're going fast. So right now we have a situation where there's a lot of volatility in the market. And what I see is momentum, like accelerated speed of how trades are happening, how geopolitics is affecting the market, how the vote on Brexit or something that happened between the trade wars of US and China manifest in the market on a regular, ongoing basis, right? And so to me, how that happens is like those little shark scrubbers that are swimming next to the shark. They watch how the market reacts, like the big sharks, how they're in there, what they're doing, but they can kind of be a part of it without being in the middle of it. And so that's what I've done in this particular system that I've developed with something called 25-cent contracts. They're a very cheap way of taking an investment or taking exposure into the market, particularly in times of volatility, that take into account what the big sharks are doing, that take into account why volatility is happening, and a bunch of other parameters, some more analytics, and presents a way for a person to take advantage of that scenario in a cheap way, and in a fast way, and in an easy way, with these 25-cent contracts or option contracts, basically.
And another thing you talk about, and we spoke about it in the piece that we recorded earlier, was this whole thing that you trade before 10 a.m. And then I think you said before that like only suckers trade after 10 a.m. What is the thinking behind that timing and that mentality? Because that's kind of intriguing for me.
So this goes back to how the big institutions and banks trade. So what they do is they have much more access to the markets when the markets aren't open, which a real person wouldn't necessarily know and doesn't have access to either. And so they're positioned before the market opens. So for example, if something happens in the Middle East with respect to oil, as it did recently with the Saudi Arabian oil fields being struck by drones, and that has a spike in oil, that has uncertainty in the Middle East, uncertainty with how that's going to manifest relative to the U.S. Lots of things are happening, and the markets are reacting. They're reacting when it first happens, and then they're reacting right after. And the big players are positioning themselves with trades to take advantage in very large size. And real people can't get in that really large size. And so what happens when the bigger markets open, and we talk about, and the model looks at what happens at the market open up to 10 a.m. for the U.S. market, so we're looking at U.S. markets when I talk about 10 a.m., is that all of those institutions and speculators and hedge funds that have positioned themselves because of news overnight and into the market open, they're already there, they're already set to go. And it's like the market opens and they're just, all of their orders get filled. And the small person is like, wait a minute, what's going on? It's like those little shark scrubbers with the shark. You know, sharks are coming and getting their trades done, and they're getting executed right when the market opens, and in a lot of cases in stocks before the market even opens, in pre-market hours. We're watching that in the model. And so the thing that happens up to 10 o'clock is a lot of that stuff basically filters out. It happens. We get to then analyze how it impacted the market in the very, very beginning of the day, sometimes as early as 9:30 when the market opens. But we take into account all of that large activity, and then we trade into that large activity. So again, we're like the little shark scrubber with the shark, and the shark's already gone. And we're now we're following, but with information.
Wow.
Before.
And this is something you use yourself on your own money, your own portfolio.
Yeah. I absolutely do, and a couple of things about that too is with 25-cent contracts, they're short term in nature. They last for generally through the end of the week that we're trading, and so one of the things I do is look on Mondays or Tuesdays in the beginning of the week, because that's when if something's going to happen, it has the most chance of happening well for the investment. And so that's what I do personally. I don't tend to trade much after 10 or towards the end of the weeks. I really do look at the beginning of the week.
Interesting. That's where all the opportunities are.
That's where the opportunities are.
And again, a 25-cent contract, so you buy that option, so you have, you know your downside, but you potentially have unlimited upside or very high upside.
Well, that's right. So, for example, with what just occurred in the Middle East, we talked about a trade in an oil company that was probably going to do well because when there's any kind of issue with oil, the major oil companies tend to do well. So what we do is we look before the market, we position it, we look at the market open to see what the sharks are doing, and then we either issue a recommendation or don't, depending what we think is going to happen. And in that scenario, we did issue a trade idea for that event.
Nice.
Yeah.
And so people kind of log in, you kind of let them know what looks interesting, if anything, and when it does, they put in their 25-cent contracts when the opportunity presents itself.
Right. So
based on what the big sharks are doing.
Well, that's right. So we said, because we don't know, right? At the end of the day, we're watching them, but we don't know if they could be sleeping on the bottom of the ocean that day. We just don't know. But to the extent that they're in there, and we think there's an opportunity for a transaction, yes, we do ask for people to be ready just in case. Because these things happen very quickly when they do happen. You know, you do want to get in as soon as we put out a trade recommendation, and then they have the opportunity to consider it and to potentially get into it.
You know, I had Kim Kiyosaki in that seat, and she was saying, look, Brian, I only invest in real assets and gold and real estate. But she said, I follow Nomi Prins and her 25-cent options, because she said, I understand that from a cash flow perspective. I put out this amount of cash. I know I'm not going to lose any more than that, but I've got a big upside. So you got a fan in Kim, I know.
I know, Kim is amazing, and it's fine. We've actually worked together on things, and I agree with a lot of how Kim looks at assets, and hard assets are very important. They're a very important part of anyone's portfolio, and looking at things holistically from the standpoint of real estate, where you can either live or get rental income, so that's a real hard asset. Any type of sort of longer term asset, like gold or precious metal, or something that's actually utilized in things. So there's a physical nature to it as well as a financial nature to it. And then yes, what I do is also look at markets, and I very much do quantify that downside, which is why I do like these 25-cent and inexpensive options, because I know at the end of the day, not every trade is going to make money. But I prefer knowing what my downside is, so that I know when the trades that make money do make money, I can balance those things off, and net I'm positive. But I can evaluate where I might lose something on any given day relative to what I gain on all the other days. And so I can balance it that way, because again, since leaving Wall Street, I don't get the same, paychecks that I got on Wall Street. You don't get the same big
bonuses anymore.
Well, exactly. So it's very important for me to preserve what I have, as well as to allocate it and then invest it properly. And so the idea of these 25-cent options and these 25-cent contracts is to be able to do that. And that's what I do with my own money, and that's what I do with this system and with this product.
And it's been very successful. So people are really having their eyes wide open as to what this can do to their portfolio, and making some pretty big gains as well, right?
Yeah, the gains are very big, because again, it's that momentum. Think of that shark again. If the shark continues in that direction, and again, we're there in the market when the volume and the momentum is most extreme, and we're alongside that, and looking at other parameters as well. That's how the money is made. That's where that positive upside is, and that's where a lot of people have been able to make a lot of money, and sort of being a part of that initial start to the day in the markets, in the right trades.
Yeah, and the right option at the right time can just be a massive investment. I mean, I traded options for a long time on Wall Street, and I learned about them when I was at MIT, and you just see, when you can understand them and limit your downside, it's a tremendous way to leverage and get big gains from the market.
Right.
And so we just talked about that. We filmed a separate video, so people can click on the link below or go to londonreal.tv/Nomi, N-O-M-I, to learn more about it. I remember the first time I understood what a call option was. It was in 1991. I was at MIT in some classroom on a whiteboard with a friend, and I was like, we couldn't get it, and then I understood what it was, and it was a real groundbreaking moment for me, to see what they can actually do.
Yeah. And to an extent, there's the math behind how options work and how they price relative to where they're underlying, or where their share prices that they're associated with, and how things move and how much time they have left before they run out, and all sorts of different components of an option. But then there is also this idea that yes, they're very powerful in terms of leveraging what the market's doing anyway. And for example, someone might not have the money to buy an Amazon share because they're stupidly expensive, but you might be able to buy an option on Amazon, which can give you the same upside, but actually greater, because you're putting a lot less into that particular transaction.
Yeah. For people that don't understand, I don't know what Amazon shares are, but I'm guessing hundreds of dollars. But with a 25-cent option, especially a short-term option like a week or something, you can get kind of the leverage of a bunch of shares, and if there's a move, you can make massive amounts on your initial investment without having to invest in that core asset.
Right.
And you can take advantage, like you said, all these weird, strange global events, which seem to be happening every week now. Well, things getting bombed, and oil prices, and elections in the Middle East, and threats of war, and new presidents, and people talking about universal basic incomes, and it's crazy. And this is a way, I guess, of taking advantage of those big moves.
Well, right, and also what we do is we watch for the impact of those moves on all of that pre-market activity, before the sharks set out, throughout the world. So starting in Asia to Europe and the UK, and then on to the US, and how events actually manifest depending on when they happen. Depending on whether it's an oil event that happens, on a Sunday in the Middle East, and then it goes into what happens at the night in Asia, and then in the morning in Europe, and so forth. There's also a lot of time. We're in a big world now, where information is instantaneous, but not every market is opened all the time still. And so therefore you can see these patterns, these trends happening and building up as certain events take place, and then how they actually ultimately get into what we specifically look at, which is the US market open. But after all of those other international markets have potentially been opened and been showing us trends and patterns relative to all these events. And yeah, the markets today really do operate much more on these knee-jerk events and processing them and the psychology of processing them than they did when I was on Wall Street and maybe, you know, also when you were on in banking, because it's it's much more emotional. What markets do. It's no longer, well, this company's good and they have a good long-term plan and they have, you know, good term money versus, you know, the debts that they have and they treat their employees well and all of these things. That's a part of the financial system, but it's also very much like what just happened like 2 hours ago. And that's a very new phenomenon, which you know, we do incorporate into the 25-cent trader model, but also in general that I've been looking at very particularly in the last couple of years, as
understanding
markets have
that
changed.
emotion.
Yeah.
Okay. And there's a whole lot of rocket science going on in what you do, right? Because you have this kind of, you look at all these different indicators, but you end up telling people, like with a green light or a red light, buy this or don't buy this. So that way you do all the number crunching and all the complicated stuff. Is that right?
Yeah, no, that's right. And even to the last moment when we issue a trade, we are looking at that green light. We're looking at what's happening like right now, where those sharks are, you know, what the pre-market trading looks like, to even make that final decision as to whether or not we see that green or whether or not we think, you know what, it's just a light green, it's a little yellow, maybe not, and not necessarily put out a trade if that's the case.
Wow. So it's like the minutes up till 9:59.
Yeah.
And you're seeing if everything's in place. If it is, you say green. If it's not, you said let's wait another day.
Right. Or even if that builds up earlier from the 9:30 when the market opens, we're literally watching that that whole period of time.
And then at 10 o'clock you go off to the gym, go do something else. You're done by 10.
Well, that's exactly right, because after that period is when all the major volume happens in the market. And even if it happens, like some event occurs at like 2 p.m., at that moment, we're actually not involved in that trade at that moment, or in a new trade at that moment, because we still feel, even if looking at various patterns and how the market reacts to even news coming out in the afternoon, the real acute behavior is still in the morning. And so even if something might present itself in the afternoon, just in terms of all our analysis and statistics, we don't feel it's going to have the same opportunity as what happens in the morning.
Yeah, that makes sense. And I remember the after-hours trading and all the things they would do, and people don't know that's happening with all these institutions. So having someone on the inside to understand that is super helpful for like regular investors. Yeah. So no, it's a really exciting product, really interesting. So people want to learn more about it, londonreal.tv/Nomi. There's a link below. And again, you walk through the whole strategy behind it and how people can take advantage of it.
That's right.
I wanted to take you back to a day where we were both in New York City. And the reason I want to ask you about this day is because I think it kind of tells us a lot about you, your life, your journey, the choices you made. But the day was 18 years ago. It was September 11th, 2001. I was flagging a taxi on Houston Street between A and B where I lived, and I was going to my .com startup job. At that point, I'd kind of moved on from banking to .coms briefly before I went back. You, I think, were at a corner office at Goldman Sachs, which was very close to the Trade Center. You watched all this happen. What happened that day to you, and what was going on in your mind even up to that day, and how did that kind of change the course of your life?
Yeah, it's really interesting because I had the corner office at Goldman Sachs, which is like this very coveted thing on a high floor. Yeah. I ran a couple of analytics groups, and it was the 29th floor. And that morning, one of the things that happened was one of the analysts who worked for me in my department came and said, you know, I think I just saw a plane go by really low next to your office. I was on the trading floor at the time, so it's like there was the corner offices, and then all in the middle was all the trading desks. So I was probably looking at a trade at that time, and he says, you know, there's this plane that just went by, and it's like, okay, well, that's weird. We're not actually in a flight path, but okay. And then like almost seconds after that, I'm still on the floor, and all this like sort of ticker, like we start to see all these little pieces of like paper, like almost like paper dust in the atmosphere, in the air outside of these windows. And then we're looking at the TV, and the very first reporting of what had happened was that, you know, maybe some helicopters or something hit the World Trade Center by mistake. And that was the original, just no one knew. Like we didn't expect there were terrorist planes, you know, terrorist-guided planes basically going into the towers. We didn't know. So we're opening the TVs now on the trading desk, and we're watching fire engulf part of one of the floors or several of the floors of the World Trade Center. And it's all very weird, but no one at that moment quite knows what's going on. So then, literally, I go back into my office to just call some people that I know at the World Trade Center, working at the World Trade Center, just to be like, you know, how are you guys? What's going on? Are you okay? And literally, as I'm going back into my office, same analyst comes in with me, and we see another plane literally fly like right past the outside, which was a second plane that hit the towers. And that plane I actually saw, and that was I believe the American Airlines plane. But now I'm not sure if that was. I believe that was the plane.
Okay, and so you saw it
but I
go
actually
in
saw
or go
a
by
plane
you.
go literally by my windows. Not into the towers, because that was then past my building, but literally flying that low, wow. You know, 29th floor level low, and headed towards the towers. At which point, there started to be much more conversation as to what these planes could be, because at this point now there's verification that there's like these two large jumbos that have basically gone into the World Trade Center. And there was much more smoke at this point. Like everything just started happening instantaneously. So now there's more paper, there's more smoke. It's all outside our windows and everything else. And so the directive from Goldman was that, you know, you guys should basically go down to the 4th floor, which happened to be where the energy trading was happening, but it also happened to be, you know, so where the stairwells kind of stopped. So go down the stairs, go down to the 4th floor. So I had to take my analysts and the rest of my group. People took their groups out. There was a lot of like, at this point panic was building because nobody knows what's going on. I'm like, you know, let's go. We'll go down the stairs. We'll be fine. We got to the 4th floor. And at this point, a lot of the phones are starting to go out in the area. You know, cell phones are starting now to work. You know, a lot of things are happening very fast. And I remember also a bunch of people from our London office, as it turned out, had flown in that morning, like before this stuff happened, and were in our offices because we were supposed to do an offsite, as it turned out, like one of these, like, you know, go to New Jersey, like hang out with your global team and actually talk about options, as it were, that day, which obviously didn't happen. But the energy traders on the 4th floor were being told by the head of the energy desk to just keep trading, right? And the reason for that was because of those knee-jerk kind of reactions to events, which is that something's happening with planes, which means something's happening with oil, which means somehow oil prices are going to go up, which means we need to get ahead of that trade and trade. And that was sort of the directive on the floor. And I was like, I want to kind of leave. I think leaving would be good. Leaving the building would be good. And they were like, you know, just stay here, don't leave the building. You love to trade,
but still you wanted to leave.
I need to, because you know, it's like, I think the best thing to do would be to not be in a building. That was my feeling.
Which wasn't obvious at that time. Like, so many weird things are happening. No one knew what was happening. Right. So yeah, but that was obviously a good instinct.
That was my instinct, and I wound up taking you know, a bunch of people who worked for me. You know, they gave them the option. You know, I said, you know, you guys can stay. I think going would be good. Because then we don't know what's going on at this point. We still don't know what's going on. For all we know, they're attacking every building on Wall Street. Like, we just don't know. Right. And, you know, if you're going to attack the World Trade Center, you're probably going to attack Goldman Sachs. I mean, we don't know. I mean, that's the mentality that I'm kind of thinking, well, you know, whatever's happening, this could be a pattern. And so we left, and I wound up walking all the way up Broadway, which was, at this point, you know, there's ambulances, there's firefighters, there's a lot of smoke, there's more ticker, people are really agitated, and people are trying to get out of the World Trade Center. And my feeling was to get out of the area. And obviously no public transportation at that point was viable, so we just basically walked north, walked uptown, and I lived sort of on 20th Street at the time, and just basically kept walking. And throughout that week, as the fallout was happening from knowing what had really gone on at the towers, I wound up volunteering with a friend of mine there were different services that were set up throughout New York to try and start to match some of the items, jewelry, certain things, watches, things that were coming from some of the bodies and some of the debris that was falling around the World Trade Center, with photos that were coming in from loved ones to find their loved ones at the Armory, which I lived near. So that was how I chose to spend the days after the attacks. And at Goldman, however, there had been a call from my boss to basically get us back into the office like 2 days after the attacks. There had been an agreement made between Goldman Sachs and the city that if that they would have a path on the waterway to go down towards Wall Street from the middle of New York to be able to work if they needed to. And their reasoning for that was that they did have to make markets, even though there's international markets all over, but they had to make markets and act as normal as possible. And I remember for me personally at the time, I was like, okay, well, I'm at the Armory where there's like weeping people trying to find out whether, their loved ones were dead or alive, and throwing out pictures of what they look like or what their items look like to locate them. And I have my boss saying, no, you guys need to get back into the office. And I'm thinking, no, this is just not right. This is really not a sort of mentality that I really want to be a part of. And it was a very visceral reaction to that difference between what's happening in real life and what was being required at Goldman.
Right.
And so the decision I made really then was like, this is just, I'd already kind of been disillusioned for a little bit, but I mean, this was really a sort of hit home moment where I was just like, I'm not long for this industry or position.
Wow.
Yeah.
You must have had some trauma if you really think about that day. I mean, watching the planes and all that, and I mean, I wasn't that close.
Yeah.
I was in the city and I walked down and I saw it, but you were really close to all that,
It's interesting because I've never really thought about that. I've always been someone who, I have a rescue diving license. I've dealt with, I've taken the courses in California where I live now in terms of sort of rescuing in earthquake situations and stuff. I've always felt that in emergency situations, I had the personal fortitude to figure it out. Or help people along the way, or do whatever. And I never really thought about how it impacted me, just how whatever needed to be done got done.
Right.
Yeah.
And so you felt kind of your values and the values of Wall Street very obviously misaligned, and it was just really crystal clear to you. And it had been kind of bothering you a little bit for a few years anyways, but that was ultimately marked what would soon be your departure from the street, they would say. For people that don't know what it's really like inside of a bank, not to mention a high power, aggressive, and very well respected bank like Goldman Sachs, what is it like? How could you describe that to people? I mean, I could try, but I'm really curious what you would say. I mean, what is the mentality? What is it not?
Right.
There's also a lot of people familiar with the show Billions, right? Which is about hedge fund managers. But back in the 90s, those guys were at banks like Goldman, right?
Yeah,
they were in proprietary trading desks. Yeah. So the mentality was similar. There's actually a plot line in Billions where the guy's trading on the back of the 9/11, stocks and things. But how would you describe that to people?
Yeah, first of all, that's a fantastic show.
Why do you like it?
I love the writing on that show, and I actually like, one of the things I really like on the show is that there's a lot of conflict within the lead characters, even the ones that are making tons of money in their personal lives or alongside what they're doing in their professional lives. That's actually shown in that show. It's not like they're 100% about making the money. I mean, they are, and it's a game, and it's a win or lose thing, and there's a constant nature of that behind the scenes. And even with the DA character, it's like there's a lot of winning and losing. It's very much binary, but yet there's a lot of gray. There's conflicts in personal life and everything else, and so
I'd say it's very accurate. A lot of those things. I know a lot of guys in hedge funds, and like you said, from the dress to the personal lives to the houses to everything. It's a decent, reasonably accurate look.
To the extent actually where I never wanted to see that show because I was like, I've lived that show. I never even wanted to watch the show, and then I kind of watched the first episode probably on a plane. Actually, I think a plane coming here at one point, and I just was like, hooked on it, and so now I'm caught up on the seasons.
Yeah, I was the same way. I didn't want to watch it. I was like,
I've done that.
And then I watched the first episode, and I was waiting for all the stereotypes and stuff, and there was a few in there. But then when I looked it deeper, I was like, this is kind of real, like what goes through a trader's mind, what their life is like, what it's not like, how it's not all glamorous, how the money doesn't fix everything, you know.
Yeah.
It's interesting to watch.
It's interesting. And actually, as that show goes on, just to finish up on that show, is there's a character that comes on, like a younger character, who uses multiple pronouns. So basically, it's considered a they and a them in terms of like just having sort of multiple sexualities inside. And but one of the things that they do in the show is they evolve in their career with respect to the hedge fund and with respect to making money and choosing the right trades and everything else. But they also kind of maintain, we'll see how the show progresses in the next season, that sense of just doing the right thing while still trying to play the game right.
Yeah.
And it's very interesting because I think for me, on Wall Street, there, you know, especially working at a Goldman Sachs from Bear Stearns, it was quite a transition because when I interviewed for Goldman, which was in New York, and I'd been in London working for Bear Stearns, I remember at the time that I was considering kind of ending banking anyway. I was already, there's a lot of stuff going on in the 90s. There was, for example, a Jubilee 2000. Which was about canceling the debt for poorer countries, major event that happened in Birmingham, UK at the time that I went to while I was still working at Bear. So I was in this sort of covert, like I want the debt to be canceled for the people on the ground. On the other hand, I'm in these institutions and we're trading around it, and it was just a weird sort of thing in me personally. I was straddling both worlds. But then when I did interview with Goldman, there was a sense at the time for me that, you know, if you're gonna stay in banking, and I'd been at a number of different firms at this point, then Goldman was kind of like the epitome of banking. Like if you're going to be in it, don't be in it to go to Merrill Lynch. You know, be in it to go to Goldman. And that was kind of also happening when I moved there. But I interviewed in New York, and they also sent people out to interview me in London because they have a long interview process, don't they? And it was 9 months.
Wow.
That's exactly right. It was 9 months of an interview process. And I interviewed everyone throughout, you know, the top of the firm. And it was really interesting because I remember there was one moment I was in New York. I was still in the midst of this 9-month interviewing process. And I was on one of the trading floors at the Goldman headquarters on 85 Broad Street, where I was that day also of the 9/11 attacks. And Lloyd Blankfein, who was running the division at the time that I wound up working for and ultimately became the CEO of Goldman Sachs, took me onto the floor, like physically walked me onto his trading floor and said, you know, take a look, you know, like it was this like grand, you know, gesture as to like this like promised land of banking or whatever it was. Take a look. I was like, I'm looking, and he's like, you know, this is not Bear Stearns. Yeah, just so we're clear, like it was almost like a look, you know, if you're going to be with us, you know, it's totally different. And it was very sort of physical presentation of how Goldman was, and that was really the mentality of Goldman. That, you know, they had what they called a culture of excellence. I mean, that's how they defined it, and you were very much a part of it, or you weren't at the firm. I mean, it was very simple. And if you're going to be at the firm, you were part of that culture, and you were called a culture carrier. And in reviews that were done of your performance throughout the years, you know, carrying that culture was a component of the reviews themselves. And that culture was ultimately, it was a very aggressive banking culture. That's what it was. But they sort of wrapped it in this notion of being perfect, or being as close to perfect as you could get in banking.
And how would that manifest itself? As in long hours, we expect presentations to be on point, everything you do is just excellent?
Well, yes. I mean, there's definitely long hours. I mean, your life was Goldman Sachs. I mean, that was pretty much how it presented itself. You know, if there was a need to, and my boss would do this, you know, have a call or call someone at like 1 a.m. in the morning because they needed something in Tokyo or whatever. You were just available. You know, that was kind of the idea. That is kind of what you signed up for. And if there were offsites, or if there were activities that Goldman wanted to do outside of, you know, the actual building or working hours or traveling hours, and you just did them. I mean, it was just part of how it was.
If there's a weekend offsite, you were there.
You were at everything, and you were pretty much living and breathing Goldman at all times.
Right, which made it excellent.
To them, it made it excellent.
And how was it for you?
So I had some real issues with how that was manifesting, even before 9/11, because around that time there was a lot of corporate fraud that was becoming apparent. Some really big name frauds like Enron and WorldCom that was coming apparent throughout not just Wall Street but the world. Like the news was starting to focus on companies that were creating sort of financial versions of themselves in tangent with the major banks to hide money, to sort of like, misrepresent their balance sheet, mislead their investors, and so all of that was happening as well. And so I was working at Goldman, for example, when Enron was a client of Goldman. They were actually competitors as well because they were both involved in trading energy. Yeah. Options and futures and everything else. And here I was sort of developing models for Goldman to look at trading strategies and seeing them go up on Enron's website, but also knowing that we're both working with Enron and competing with Enron. And this was just one of many names like that. And it just seemed very wrong. And also one of the things I had always done throughout my career on Wall Street, particularly when I was in London in the 90s when we were talking about, the EU was about to happen. There's a lot of countries that were changing how their economies were viewed and how their debt loads were viewed and stuff, and just the real world is analyzing what the downside of investing in certain ways could be. I was very big on the downside.
Right, which is kind of why you had this 25-cent trading strategy. Right. Even that's probably why you left Goldman on 9/11, because you're thinking, sure, I could stay on the fourth floor and make a bunch of money trading energy, but the downside is I can die. So you're always looking to limit.
Or I can lose my soul, right?
Right,
I mean,
there's
the downside of that as well. And so, and even when I was developing those models in London for Bear, the downside meant that there could be an event that happens in Croatia or in Venezuela or wherever, and that could create a whole spiral of other events that could be negative for a particular situation or particular trade or whatever. And so I was always quantifying the possibility of those downsides and what they would look like in mathy terms, wonkily, for a particular strategy. And so at Goldman, it was becoming harder for me to get internal funding, attention, green light, to creating systems and working with, finding the people internally who I could gather, who worked with me to work on the systems that quantified that downside. It was all about showing the upside in particular strategies. And we did some big strategies for some very big corporations and institutions. And I felt like I wasn't able to get traction for internal attention to the downside. And that just really bothered me. And I remember having a conversation with one of the senior partners who had been on the hiring 9-month committee, or a series of people for me in the interview process, and saying, what is it? Like, this is like, shouldn't we want to tell our clients this? I mean, shouldn't we, for the long term, want to be able to say that, look, you can do this and you can make all this money, but if this happens, then you're going to lose money. That's just the way it is. And he took me aside and he said, you know what? Your clients are senior management. Like, when you talk about clients, they're not the firm's clients. They're managing up. If you want to do well here, if you want to survive here, if you want to make money, you manage up. Those are your clients. And I didn't really like that either.
Right. And they want you to make as much money as possible.
They want you to make as much money as possible, not worry about funding analysis for the downside or whatever it might be that could take away from that positive narrative.
Okay, gotcha. What's it like being a woman at Goldman?
That's actually interesting too, because at Bear, when I was in London, I was senior managing director. I reached that point, so I was the most senior woman at Bear in London at the time. And I remember that there were 7 senior managing directors in research globally. And I was one of them. The rest were men, and I didn't pitch to make myself the first woman senior managing director, globally in research. That wasn't my intent. I just was like a person. It didn't seemed to me that it would matter. And so it was never part of my internal communications at Bear, for example, to be like, hey, I'm a woman, can I be like the token woman this? Or because I'm a woman, I'm not getting that. Like it just never kind of occurred to me, and how it was made up there was very much kind of like an every person for themselves kind of atmosphere, but I actually liked that. Whereas at Goldman, there was a real structure of what they called diversity initiatives. I was actually on the cross-division diversity group, which was a lot of senior people from different groups throughout the world and throughout the U.S. who basically, focused on different things, in that case, diversity. And the idea was, all right, well, we have so many women, we need to make sure they're in certain positions, so we get our sort of diversity check marks, when in reality, the guy who ran the diversity committee, who is now David Solomon, who is now the head of Goldman, never actually had hired a woman. So it's one of these like weird things where diversity meant having a diversity group, but not necessarily like following through in terms of bringing women up through the ranks. And when I was at Goldman as a managing director there, I think we were about 11% of the company. And still the numbers at Goldman are about 11% of the company for managing directors. So as a woman, there are certainly, the feeling of being in a boys' club throughout my career. But ironically, when I got to a firm that supposedly had a diversity initiative, it wasn't really any different. It had an outside initiative. But going back to just how I dealt with things as a woman is I just never thought about it personally. I just did my job, and when something needed to get done, I was very vocal about it. I did have instances on Wall Street where men I didn't think behaved properly, and I would alert my bosses of those. Like I had no fear that, I'm going to say something about the head of the FXS or something and I'm going to lose my job. Like I didn't care. I was like, this guy did something wrong to me, so I'm going to tell someone. And that's how I I experienced things on Wall Street just from the fact that it was a boys' club and the mentality of it, but I never really let it change how the level of sort of respect that I believed I deserved, or the confidence that I had in being public or being vocal about things that I thought were wrong.
Okay. When was it time to blow the whistle, per se, and how did you decide that you wanted to talk about this stuff and leave the whole banking industry, which would have to have been forever when you decided to do that?
Right, as it turned out, yes. So in that 9/11 period, and in the period where Enron and WorldCom were big in terms of the scandal.
Yeah, for people that don't remember, these were massive corporations that went bankrupt because of fraud. Like
pretty much.
Accounting fraud,
right.
Like lying about revenues, and the banks were complicit, perhaps.
That's right.
They were.
That's right.
And I know a lot of people that lost a lot of money on those things, and
right.
Billions of dollars were wiped out of people's portfolios.
That's right, and it was a very big scandal at the time, and it did create a lot of more external inspection as to what was going on Wall Street, and also with respect to how corporations in Wall Street worked together or hid the real sort of status of their books in terms of working together and stuff like that. And it was actually ultimately a global phenomenon in terms of hiding what was really going on, and so that was one of the things that I had found obviously distasteful, but also it was a period of time where things were changing that quickly. So it was all about, sort of not taking blame and sort of hiding numbers and hiding roles of one company relative to another that I found wasn't right for me. So I had a kind of friend, he became my friend, but a reporter actually at the FT. It turned out was very much interested in this story as it was unfolding. And I wasn't allowed, or people at Goldman weren't technically allowed to talk to the press without a lot of okays internally. Today it's a little bit different in that if you're an economist or a strategist or something, you can go on CNBC, you can go on Bloomberg, you can talk about just general things. But back then it was much more that you just couldn't really talk unless it was vetted. But I did have an association with someone because I saw what was going on, and I also knew that, especially once 9/11 happened, that my time was going to be very limited at that point in the industry. And so I started talking to him about what was going on and the relationship between the bank and banks in general and Enron and companies like that in general. And I said, you know, I'm kind of over this anyway, and I decided I actually liked writing. I'd actually always thought, okay, well, if I'm not, you know, what else could I be in my life? And I always had a thread of writing as well. And I had started taking, as it turned out, courses in New York at the New School, which is a university there, but also had night courses in like nonfiction writing and creative writing and stuff. So the moments I could actually escape from Goldman, I was starting to take writing just to kind of flex that muscle. And I wanted to write fiction. I just decided I was going to leave Wall Street. All this stuff was going on. I didn't want a part of it. I just wanted to do something else with my life. Life's too short. And I just wanted to be like a novelist. That's what I decided. And I wound up applying for MFA programs throughout New York. And I got rejected to all of them. I got rejected from the universities that had accepted me to their math and statistics PhD programs. But their writing divisions were like, no, your writing's not that good. Like, stop. Like, I was getting all these rejections, and I was telling this friend at the FT what was going on. This was all in tandem with the end of my months on Wall Street, and he's like, why don't you just try writing about, you know, what's happening? And I was like, well, I can't do that now. He's like, okay, but why don't you just think about that? So what wound up happening was, as I was resigning with this idea that I would still somehow be a novelist from Goldman, I was also kind of talking to him, and he said, you know what, I know these people at Fortune magazine. They're looking for stories on what's happening with the communication sector, with WorldCom and companies like it, and you're right in the thick of it, and maybe, you know, let's just... So long story short, I wound up talking to them about writing an article with them. They paired me up with an internal reporter as well, and we wound up writing my first piece on Global Crossing, which was this like massive fraud as well. And I just sort of wandered into journalism, and then I found also there was a lot of lack of understanding about the fraud and corruption at the heart of Wall Street and corporate America. And I started getting asked to talk. Like the U.S. Coast Guard actually asked me very early on after I resigned to talk about ethics. And ethics on Wall Street, and it sort of evolved into this need to know versus I had knowledge matchup, and then sort of went from there.
What did your ex-banking colleagues think of you blowing the whistle?
That's interesting. So some of them stopped talking to me, and some of them were told to stop talking to me, and then some of them were very much, you know, right on. You know, it was very, because we all knew what was going on. Like anyone on Wall Street, you know, had a sense for how Wall Street was operating and how it was changing for the worse in that respect. And I think ultimately, like, I'm still friends today with people I worked with at Bear Stearns in London. And I'm also not talking to many people who won't talk to me. So it really, you know, they pick sides.
Yeah. Yeah. So I joined, you know, Bankers Trust in '93, and I got on the trading desk. Again, one of those big floors that they were like, here's the trading floor. And it was impressive. It was massive, and there was 300 people there, and it was the size of a football field, and people screaming about foreign exchange and treasury bonds, and we were in the derivatives desk. But I was taught at age 22, what we do is we rip as much money out of our clients as possible. Actually, out of anybody we can, our colleagues, our clients, anybody.
It's cutthroat.
It's cutthroat, and the more the merrier. And so it's like, you know, you can make $1 million on that trade, make 10 million on that trade. And it was this culture, and I used to describe it as people as if I grew up in a family where I saw my dad beat my mom, then I would probably beat my girlfriend. It was like, it was just this thing where it wasn't questioned, and you watched it happen, and then you just assumed that's the way life was. Until later you go back and you're like, why am I doing this? And is it the right thing to do? And Bankers Trust famously got sued by a company, and then sued by a few companies, and then they hit him with the RICO the RICO, which was used to take Al Capone
Mafia.
down. Yeah, it was a racketeering because they proved that Bankers Trust had done the same criminal act to multiple companies, just like the mob did.
Yep.
And so, which tripled the damages.
Yep.
Which back then was a lot of money. These days, people pay billion-dollar settlements. But back then, they remember Procter & Gamble had sued Bankers Trust for $77 million, and it tripled on the RICO stats. So all of a sudden, they were looking at a few $100 million, and it was like real money, and people were panicking. But the culture didn't necessarily change. No. You know. And so back to you. What did you see happening when you started talking about it, and then? Has it changed? Will it ever change?
Yeah, you know what's interesting? When I first started talking about, so this was now 2002 to like 2004, I had my first nonfiction book came out, which was called Other People's Money, The Corporate Mugging of America. And it was all about Enron and WorldCom and banking and my time at Goldman. I mean, it was very, I think I've become a clearer writer over the years, so it was probably more technical than it might have been had I written it now. But it was sort of my first foray out into that and explaining what was going on. And I remember one of the chapters, I talked about credit derivatives, and I talked about that competition, and I talked about, you know, that sort of striving to be the one who can get credit for that trade so that you can be the one to get the biggest bonus or to climb up the ladder the quickest or to be in favor with the senior person who's doing the same thing and so forth. And I wrote about all that, and I also wrote about how I hadn't thought anything had changed at that point in the couple years since Enron and WorldCom. So you have these massive scandals, you have complicity of the banks, investigations in Washington and throughout the city of London and so forth for the international components of it. And then like it just kind of faded. So then I wrote this book about it, and at the time, I was like, it hadn't faded because some of the exact types of securities I had been working with, instruments like financial things inside the firms that I had been working with, are now more and more dangerous because there's less transparency. People don't know how they actually behave. They could be at the crux of a crisis. And then a few years later, we have the financial crisis. So that entire period, even though there'd been all this fraud in 2001, 2002, it was exposed, it was investigated, not a lot changed. And then, you know, you get into a period 2004 to 2007 where there's this extra buildup of other types of fraud and risk in the financial system and with respect to banks. And then you have this crisis. So nothing changed during that period, even though there was a couple years of, you know, looking into it. And then since the financial crisis, I don't think a lot has changed either. What happened post the financial crisis was we had a lot of central banks, so the Federal Reserve, the European Central Bank, all these sort of larger monolithic institutions who can sort of create money, or what they call liquidity, going back to the ocean and the sharks, basically feeding, you know, pool of money into the banking system to kind of help them paper over a lot of the losses they incurred for the entire world. And as a result, there wasn't a lot of change to these banks because all they really got for creating a financial crisis was money. And so like if you give a lot of money to a group of people who basically like lost a lot of money, they're not even. They're not going to change, and there hasn't been a lot of change, I don't think, in the cultures as a result of that. And so now we're 11 years after the financial crisis. We could see another one, could see in a year and 2 years and 3 years, whatever it might be, because nothing has changed.
Right. And when it comes to people investing their money, do you usually tell them to stay away from the banks and to take charge themselves with things that they can do? Because it's funny, when I left banking, I had all my bankers that covered me always trying to sell me these financial products they created. And I was like, what are you, crazy? I used to create these, and I know what they take out of these trades. Like, I don't want any of your cooked up, you know, stuff, radioactive, toxic things you want to sell me. And I always like tried to take it back myself and make my own decisions. Is that what you try to encourage people to do?
Oh, absolutely. I remember when, in the wake of the financial crisis, I actually, I'd been in New York, and I owned a place in New York, and I sold it around that time. And I used some of that money, because I was also in journalism now at this time, so I'd use some of it to kind of, just as an exercise, not because I actually wanted to give them access to most of what I had, invested it with mutual funds at JP Morgan Chase. just for the sheer like experiment of it. And I watched how they managed that little portion of my money with what actually I could have done. And they lost a lot of money on my money. It was just, again, an exercise, but I wound up having these calls with the various advisors and stuff, you know, who are helping little people invest their money and stuff. And I was like, how is it possible that in this scenario, you lost money, whereas like the market actually, this was right before the crisis, the market actually went up. Like, how is it possible that you like, what did you have to do to actually lose money and I have to pay a fee to you in order for you to lose my money? And there's no answer to that, but except for the fact that banks are still set up as they were in the Enron and WorldCom days to effectively make fees out of converting their depositors, converting their clients to people that want more complicated esoteric products and want to pay for management of their money and all this other kind of stuff. And they don't get paid on how they perform, they just get paid on the volume and the amount. And so from my perspective, even a savings account, you know, a regular bank like JP Morgan Chase, rates are very low now, it pays literally nothing on your savings account, whereas you could put savings in an online bank like an Ally or an Aspiration or even American Express savings, and you could get closer to, in the US, 2% versus 0 or 0.25%. And so even in things where banks should be paying people to like continue to be with them, they don't have to because they're so big. But in those scenarios, I don't have any savings with a bank.
Yeah.
For example.
Just keep it out.
There's just no point. Right.
Yeah. And that's why you've gone on with this 25-cent contract, to just show people how they can take control themselves, understand these products that trade every day and that are liquid, and be able to try to invest and make money on some of these moves.
Yeah, that's exactly right. And interesting that you mentioned, like, I want to show people. I mean, there's very easy ways that I talk about to access these types of products, of 25-cent contracts and so forth, and to watch and to listen for recommendations. But I think always it's important for people to learn for themselves and to watch for themselves and to see how things go. If they're new to a product, to paper trade it for a minute, just to do all the things that ultimately preserve not just their money, but also teach them. You know, I think that educational process is very, very important. Yeah,
so important. And again, we recorded this kind of private video that's not going to be available anywhere else. There's a link below, where it's londonreal.tv/Nomi, N-O-M-I, and you kind of go more into detail on how this 25-cent option trades works. And it's interesting you said that, because I had Kim Kiyosaki in here, and she said the same thing you just said. She said, and especially when it comes to women, and I'd like to talk about this as well, because I know both you and Kim are big into trying to educate women about finance. Mm-hmm. But she said, you know, a lot of people, not just women, but people too, they get scared when they hear about gold or an option or something they don't understand. She said, okay, go buy one piece of gold. Or in your case, go buy one of Nomi's 25-cent options. It literally costs you 25 cents. And watch it. Watch it for those 4 days or 7 days. Watch what the market, watch what go up or down. And you'll see, maybe make $1, maybe it'll go to 0, but you'll understand it. And once you do that, you can really, I always describe it, it's like getting to know a person. Each one of these instruments has a personality. Yeah. Some are like axe murderers, and some are boring. They're like your grandpa. Some are reliable, some are unreliable, but they all have these personalities. Just wanted to get your thoughts on that, and then just educating women in finance.
Yeah, so it's interesting because I know that a lot of, and I've had the honor really of being able to work with Kim Kiyosaki on different things, and I mean, she's such a force for women, and in terms of how she does approach investment. So when she does look at a real estate investment, she's not just looking at it from, can it go up, or even do I like it? She's actually looking at all the sort of 360 degree sides of it. How can it go down? How can I extract money from it over time? You know, does it make sense for various different reasons? And she really does do her homework on every single thing. And one of the things that she and I have talked about, and that I really strongly believe in terms of women, and people doing their homework in general about any type of financial investment, is that the more you do yourself, the more you learn what to watch and what questions to ask, and that makes you a better and more confident investor, and also a more confident human. I mean, I think over years, and I see this with the women I talk to, who, for example, let the men in their lives handle the finances. This is still a thing. Say they're married, the husband handles the finances, and let's say there's a divorce or a death or some situation where all of a sudden they are required to sort of step up, and they don't have the language. And they haven't developed their own experience to be able to do it for themselves, and that creates, it creates uncertainty, it creates stress. I mean, there's a lot of things that
which
happen.
hurts the relationship in the family too.
Yeah.
Right?
Exactly, and so it's the same thing with female students. So in any point of life, is that for example, student debt's very big, and how can one handle that and manage that going forward into the workforce? And I think with women in particular, there's a sense that economics, that finance, and so forth isn't really their thing. Now, not with all women, and it's changing. But I don't think it's necessarily changing fast enough, and I think part of the reason for that, women multitask a lot of things, and one of the elements of finance and investing is that you do have to learn a new language in order to be confident with it. And it's like learning Spanish or French or anything else, like you have to practice. And you have to practice, whether it's first on paper, whether it's, as Kim talks about, doing like one little share or like one little thing or one little real estate investment, starting small, and just becoming comfortable. And so that's one of the things that I talk to women about, and I know she talks to women about this as well, is that the more comfortable you feel with financial elements, the better you'll be at managing them, the better decisions you'll make, and the more confident and like empowered you'll be in your own life, in any aspect of your life, not just with respect to money.
Yeah, I think it's super important. When about a year ago, I was out in Phoenix to do something with Robert Kiyosaki, and you were there as well. Yeah. And I know you were on the Rich Dad radio show, and Robert Kiyosaki was telling me about you, and he said, Brian, what I love about Nomi is she brings this kind of female energy into the financial space that's traditionally been dominated by this male energy. Mm-hmm. And we're doing a movie right now that kind of explores different aspects. And I mean, men and women can both have female and male energy. Mm-hmm. And, one, you could kind of roughly say one's super aggressive, one more is nurturing and more long-term thinking. But do you ever think about that when it comes to money? Because it sounds like your risk management sensibility comes from like this female energy.
Yeah, it's interesting because that's been, throughout my career, as I've always looked at or tried to look at as many sides of a strategy, upside and downside, as possible. And also within Wall Street, I always thought that numbers, that the actual finance of finance, how things move, the mathematical components of it, don't care whether you're a man or a woman. Right? It's more a question of how you use them, and that might the whole idea of risk management, of being there for a rainy day, of that kind of thing, might be partially female energy. But I also think that in trading, it's interesting because I find that women make better traders than men, even though there are far fewer of them. And one of the reasons I find that is because men, and this is like throughout my experience on Wall Street and just watching from the outside as well, and just knowing a lot of traders, as men tend to get very sort of ego combined in their trades, right? So it's like, if they have a great trade and it's a great win and it's awesome, but it's like who they are as a human. Whereas I think women are more like, okay, I had a great trade, good, let's move on to the next trade. And they don't necessarily identify with the win or the loss, actually as emotionally, I think, as men do.
Yeah, I think you're totally right.
And so I do think they make better traders.
I think you're right. I used to do the same thing when I was first trading. I would, if my book was up, I had a great day. I felt great. Yeah. And my book was down, I had a bad day. And like 2 years in, I think I was trading in Chicago at the time. I went home one day and I was like, your mood is determined whether interest rates went up or down and you were long or short that day. Yeah. That's ridiculous. Yeah. Like I told myself. And we all know the great traders in bond pits and foreign exchange desks have great discipline. Right? Yes. They take emotion out of the equation.
That's right.
So I would agree with you. Because I think it's just hard as a man. And then again, the man to get on that trading desk, he's probably gone through all the alpha stuff and then the culture of excellence. So you're probably on that edge of the spectrum anyways. And then and then women, because you're dealing with that, particularly in the industry, and then even if you're looking at finance outside, you've
or over time, you've kind of accepted their behavior and you've become immune to it. And again, taking that part of the emotion out makes you a better trader. I remember one of the young women who worked for me back in London had an altercation with one of the traders on one of the bond desks, and it really upset her. And she comes to me crying and talking about it, and it was verbal. It was, and I wound up saying to her, let me just sort this out. And I go over to the guy on the bond desk, and I'm like, all right, if you ever do that again, we're not providing analytics for you. Now, I didn't go into the whole what it was and we're gonna tell man. It's like, we're just not gonna give you our stuff. I get to make that decision, okay? And and I didn't. And it wasn't an emotional thing. It was literally like, this is a transaction. Okay, this is my analyst. You are pissing her off. Don't. Here's what I can do to bargain with you on the other side of why you're not. And everybody was, and they became everything was fine. From that moment on. But it was not an emotional reaction. She had an emotional reaction. That happens. At my point in where I was at that time in my career, I was just like, no, this is how it's going to go down or not go down. It's your choice. But this, and I think that's ultimately going back to trading, where not all the trades that I look at for myself make money, but I don't tend to get as emotionally wrapped up in the ones that don't, because I find that will, potentially keep me from doing the next one and getting up the next day and looking at everything with rules and with discipline, as if nothing happened the day before. And I think that's also what makes for a good trader is literally just, all right, I'm coming to it today.
Very much so.
Yeah.
You have this concept you call breaking through the external noise. What do you mean by that?
Well, I think that's a concept that's in life, and that's also in finance and trading and in the news. Is that it's the idea of taking information and kind of trying to filter out what people's intent might be with that information. So whether I'm looking at something in the news that's happening because politicians have a certain reason for what they're doing, is try to, figure out a way to say, okay, well, how would this situation go down if we took out their motivation and just looked at the facts?
Right.
And the same thing in life. If you have a fight with, someone you're having a relationship with, or, or a business decision or whatever it might be, is if you can kind of try to view that situation without what their potential motivation is, or their emotions, or whatever, is just try to kind of hone in on what's actually here and now and what's actually in front of you, and information and facts.
And is
scientifically.
That kind of, and your 25-cent contracts is kind of about that as well, just not letting the external noise affect your decisions? Yeah,
because it's interesting. We've looked at trades, because we always look at what's happening in the markets before we recommend a trade, and it's always you're always learning, right? We're always learning ourselves, and we're always learning how we behave in certain situations. And sometimes I'm always between. The way our system works is we're between 2 or 3 potential trades that have certain potential green lights coming into if we recommend something. So there's always a preset of conditions and watching. And then we get down to 2, and then it's usually between 2. And sometimes I will find myself having a reaction that says, well, this one might be better because more people are talking about it in the market. But then I'll look at both of them, and I'll see the volume, and I'll see the sort of sharks going into the second one. I'll be like, no, you're doing this on rules. Take that thought out of it. Take the fact that 4 newscasters just talked about that name, and just go back to what you're seeing. Go back to the activity in the market. And that has always worked, relative. Because I always go back and see in this model. I always track the trades I didn't do. And I do that to learn. I also do that to make me more confident in the model, and if there's anything I need to change to be able to incorporate that. But if I stick with the rule and not what I'm feeling, it works better.
Okay. You also have this concept where you talk about the markets versus the real economy. What do you mean by that? Because they are sometimes different things, even though they should be linked.
Right. Well, what we've experienced just in the world since the financial crisis, since 2007, 2008, is that there's been this massive shift in terms of where money goes. because central banks created so much money so cheaply over the decades since then, a lot of it's gone into just the financial markets and financial assets. So we've gotten bubbles in stock markets throughout the world, in bond markets throughout the world. More debt has been created. Lots of things have happened that I consider to be bubbles, but the real economy itself hasn't had a bubble. It's not like any economy anywhere in the world is like has been zooming to the extent that markets have been. And the reason for that is because this money isn't finding its way into the real economy in the same kind of amounts or having the same effect as it finds in financial assets. And so what that's created is this sort of difference between how the real economy experiences money and growth and how the financial assets do. And that's changed a lot. And what happens when the real economy lags or doesn't perform as well as the markets, which we continue to see, in general it means that people get more stressed, people get more economically anxious, more inequality comes into play, inequality between different people, between different countries, between different regions, and that creates more tensions, political tensions and so forth, or geopolitical tensions and so forth. And I think that's what's happening. We're in this world right now where because so much money is going sort of to the top and into markets, and less is sticking around the real economy, it's creating much more of this chasm, and that's something I'm concerned about, and it's something where I think it could have really negative ramifications going forward.
Okay, let's talk about that. So we're like 11 years now into this bull market. What happens in the next 5 years? Is there a crash coming? We obviously have an election coming up in the US. We have all sorts of things happening in the world. What do you see in the next 5 years? And crash-wise? Yeah,
so one of the things that we're in new territory. The fact that central banks have created over $22 trillion worth of money kind of out of nowhere in the last 11 years is really potent for markets. And the fact that they can still do that, the major ones can still, like the Fed, the European Central Bank, Bank of Japan, can still create money, keep rates low, or keep the cost of, therefore, governments borrowing low. So therefore governments borrow more money to manage themselves and so forth. This creates a situation where, like in any budget, you're not really taking into account what's coming in and what you're spending. You're taking into account what you might be able to get because it's artificially fabricated, like money's coming out of electronic coffers.
They're just printing that money, basically.
Yeah, they're just electronically creating that money, and that's what's happened. And so as a result, real economies throughout the world just are deteriorating, and growth is deteriorating, manufacturing is deteriorating, production is deteriorating, and particularly in developing countries and emerging markets, it's even worse because they don't also have the same sort of constant investment in their real economies, not in their markets, but in their real economies, especially when they're lagging the larger economies, or the larger economies basically need to keep their money back home. So you have the situation where the money's not going to the real economies of the big countries, and it's certainly therefore not getting into the real economies of the emerging market countries. And then you throw into that geopolitical risk and trade wars, which have created a whole additional wrinkle of economic uncertainty into the world. And I think that we are in a prolonged period, we're starting the beginning of a prolonged period now of a recession or even worse, depending on which country. And that's going to also create a lot of political tensions, a lot of people being very unhappy, a lot of demonstrations and unrest. So I do think we're in that. Now the markets might continue to stay relatively positive during that period because they are being fed money. But in terms of real life and real people throughout the world, I do see growth slowing down, recession starting, and as you get further away from the money-creating countries like the U.S., it becoming more and more precarious.
I mean, this is one of the longest bull markets we've had.
In finance, it's a very big bull market.
Right.
And stocks are certainly up, and even when they have very volatile days, it's been much more up and down. Coming into markets now than there have been before. It's still in an upward trend for the most part, a lot of the markets, but on any given day you can have these like 100-point up and down, or multi-100-point up and down swings, and that's because a lot of the information that's coming into the markets now, whether geopolitics, elections, you know, UK Supreme Court's voting that something a prime minister did wasn't legal. All of those sorts of things that come in create more uncertainty into the market. So they're buoyed up by money coming in from central banks, but they're jiggery because of these events, and then the real economy suffers from both.
Yeah, and your 25-cent contract strategy kind of potentially protects you from that crash because you're not involved in being long a lot of these assets. So you can take advantage of pockets of volatility here and there through that strategy. Right,
and the strategy is basically you're in and out that day. So the idea isn't to take a view over the long haul in any one name or in the markets in general. It's literally like what's happening right now. So where are the sharks on Wall Street and throughout the world positioned right now, and what do we need to look at to potentially position alongside that, but for very short periods and in a very cheap way.
Right. It's a fascinating strategy. It's kind of exciting.
Yeah.
Feels like I'm kind of on the inside, like I'm one of those like, you know, analytic, high-speed traders where I can get in and out. But most people don't have experience of buying and selling something the same day, right? The average consumer doesn't do that usually, right?
No, I mean, a lot of people, first of all, look at things over the long haul or allow their fund managers or their advisors to do that for them, most people, in fact. So there is an educational component to doing basically the strategy for yourself. And the idea of a 25-cent contract is that ultimately you're not exposing a lot. You're not buying a share for, you know, 100 or 200 or 300 whatever dollars. You're buying something very cheap. So if it doesn't work out, the downside is limited, but the upside is potentially very high because you're starting at such a low level and you're looking at very short periods of volatility or momentum or movement in the market on that day. So so setting up the trade is actually simple. You know, we'll recommend a strategy, and then based on someone's account, they can execute that strategy. You know, they basically buy what we suggest if they choose to do that, and then set a limit. So basically, we talk about something called limits, which is that you can basically lock in what your gain could be. And that way you're also protected in case you're not watching it at that moment.
Okay, nice. And there's more information on the link below about that, londonreal.tv/Nomi. Tell me about you. You travel a lot. What is something in your day that's just non-negotiable? And it might be also how you write or how you create, but what is like a daily practice or a routine that you have, even though you're at a lot of countries around the world, right?
I travel a lot. I'm in a lot of different time zones. So when I am home, when I get to be home, it's non-negotiable to be with my dogs, to walk them, to hang out with them. I mean, you know, that's something that gives me great comfort, and I love spending time with them. When I'm on the road, the one thing that I keep constant, or some of the things I keep on, is doing 10 minutes of meditation every day.
Okay.
And in different ways, but basically coming into sort of quiet breathing space and sometimes meditating on a particular topic every day, so that I have some way of just kind of like regrouping. If I can, I also have a yoga practice that I do, and I actually, it's become easier to do that with various apps on my phone. I have a particular yoga app that's very good for my travel and the amount of time I might have and how tired I might be from all the jet lag. Is that it has 10-minute, 15-minute, half-hour, and 1-hour sessions. So if I can only get to 10 minutes, I will do 10 minutes. But I tend to at least do 15 on that, and then the 10 minutes of meditation during the day, so I keep myself sort of physically and mentally grounded for whatever I'm dealing with and wherever I am.
Yeah, it's such a good practice. I'm on 20 minutes now, right when I wake up, and I just make sure I don't pick the phone up or anything. So what I try to do now in the mornings, I try to become nobody in the morning.
Yeah.
So I try to just not wake up to the same problems, the same behaviors, the same this, and I try to interrupt the pattern and try to just become nothing and see if I can just be nothing for a while, and then I re-engage.
Yeah.
So I think it's just a way to kind of detach a little bit.
And to just be yourself and just kind of then greet whatever might be in front of you.
Yeah, exactly.
Yeah.
If I were to ask 5 of your friends, what is Nomi's superpower? How is she able to do everything you do, you know, to write all of these books, to travel the world, you're on these major television networks, you got this, you know, incredible financial product out. How do you do it? What is the superpower?
I think they think I don't sleep. So I think they might think that my superpower is to not be able to sleep, but the fact is I actually do need sleep. So it isn't really that. I think it's my ability to multitask, really, and to block out what isn't as immediately important, is to be able to, I think, always hone down to what's necessary to do right now and to be very organized about that.
Right, again, get rid of the external noise.
Get rid of the external noise, yeah.
So much noise.
Yeah.
What was the best day of your life and the worst day of your
Oh,
life?
gosh. I don't know. This is hard. I don't really know, because I have so many good days.
All right, well, can you think of a good day or a bad day?
You know, I had a recent good day, and I think there might be something with me anyway, or us as humans, where you sort of recalibrate as you go through your life. Definitely. And so whatever happened that was great or awful, you kind of, other things come up and they kind of always process. But I was actually, so on the good side, I was in Santa Barbara on a boat. I love the water. I love boats. I mean, I'm always at my just calmest being on the ocean in different ways. And I was with my partner and we were on this boat and it was a wine tasting event. It was 2 hours and it was between like, I want to say like 5 and 7, so it was just into sunset but not quite sunset. And it was just between the wine and the water and the mountains around us and the boat, I remember saying to him, I was like, you know, this is such a good day. I had no interruptions about anything. You know, it was like an afternoon on a weekend. I had no work that I had to immediately do like that moment. And it was that idea of like being here and being now and just being connected to the water and to nature. I'm sure the wine had something to do with it. It was a good one. But I just remember feeling incredibly at peace. And I just remember thinking, this is good. That feeling of peace and sort of the beauty around me and just my experience, what I was doing right at that time was just, I just like did a little notation in my mind of like, this is a good day.
Yeah, no, that makes sense.
Days like this are good. In terms of bad stuff, you know, it's been, I've been very fortunate that the days that are bad, I don't know, like things like 9/11, things like, things that have happened with me and my family. Right now my dad actually is quite sick and I'm here in London and I'm constantly sort of on the phone trying to figure out if I should like hop on a plane and get back to see him, or like what's my time, because we were obviously quite close over the years, and so there's these periods of real tension and bad feeling that I have.
Yeah, okay.
Yeah.
What scares you?
So for me, I've always lived my life in such a way that I can be as independent as possible. Whether that's financially or whether that's, you know, my thoughts, my how I express myself, you know, whatever it might be. I find independence, you know, I left home when I was 16. I find independence like very big for me. And so my worst fear is somehow losing that. You know, whether that's, you know, in an extreme case like becoming paralyzed or like whatever, just different manifestations of losing and independence would be bad.
Yeah, well, that makes sense. Yeah. What would we be surprised to learn about Nomi Prins? Like something you do or some guilty pleasure or some strange thing besides the Aikido black belt?
So I'm really good at karaoke.
Really?
As it turns out.
So everybody says.
That is true. So I won a karaoke competition in Japan, in Tokyo. Now, when I say competition, we're talking their version, you know, in a bar, down in a dungeon. But
still, though, they don't play around there.
They don't mess around down there. Lots of, it was a Madonna song. But
Which
yes,
song?
I was. It was La Isla Bonita.
Oh,
yes,
okay.
that I did.
Good
yeah,
song.
what's that? But yes, I you know, they kind of have these like scores that like show up in I don't know if that's
like
even the case.
Computer generated?
It's computers. Yeah, it's kind of like these scores. It's a Japanese thing. I mean, because again, they take it very seriously there. Yeah. But there's a whole mechanism. So that was fun. So I do that. What have I done that would be surprising? Yeah, well, that's a thing. The singing, I think, is a thing.
Okay.
Yeah, karaoke is a thing.
Okay.
Yeah.
And the Aikido, you still practice?
I don't. I did for years. I did here. I got my black belt actually here at Richmond. In Aikido. And I actually started it because I was mugged on the streets in New York, and I started Aikido in New York because like I don't really want to deal with like not being able to handle a mugging situation again.
Exactly.
But I don't do it anymore.
Okay.
I should, yeah.
It's hard to stay in touch with those things. What keeps you awake at night?
Really, the biggest thing that keeps me awake when I do stay awake is my family. I mean, it is wondering how they're doing, and it's different. Like my dad being sick, or what's going to happen with my mom. Like I find that family stuff is the thing that keeps me most awake.
And what about like the world? I mean, part of your job is to consume all of this news. Do you ever worry that we're not going to make it, or do you feel like we are going to figure things out, or is this a bad time in history, or is this actually a good time in history?
You know, it's interesting because when I do worry about that, which is mostly what I do during my waking hours, I think that my fear is that we won't learn from what we're experiencing historically. Like we did not learn from the financial crisis. I don't think things were changed enough. I think they were glossed over, and I think that will ultimately present itself as another crisis and worse situation than we had before. And it really bothers me that like the world doesn't get it. You know, and that's a real thing. It also bothers me that we don't have. And this is kind of a human nature thing, but the world tends to blame things, or people tend to blame things for what's going on in their lives or economically or whatever on other people, when it's not necessarily the other people's fault, when it might be more of the system, or you know, how governments and finances are connected to each other, just sort of bigger matters, but they take it out on each other. Which is kind of what's been happening throughout time, but it bothers me that we haven't evolved enough in terms of humanity in general to not blame each other when things go wrong that aren't necessarily because of someone being different or else or other, but because of something bigger than that.
Yeah, it's a powerful lesson. Nomi, I always ask a few questions at the end. I'm going to ask you if you could pick up the phone and call the 20-year-old Nomi and give that young woman a bit of advice. First of all, where were you, and what would you tell her?
Okay, so when I was 20, I was working at Chase. I probably had just come to London on business or around it for like the first time.
Were you at university or not?
No, like I graduated when I was 18 from college. I started working on, no, I was between 18 and 19. I started working on Wall Street when I was 19.
Wow.
So I started at Chase when I was 19. I got a job as a programmer. I had just gotten my degree in math and sort of flipped over to be in the real world and to work. So when I was 20, I was still at Chase. And I was developing sort of systems back then. And I do remember I wanted to travel. I mean, this was like a big sort of theme, and I've been fortunate. That in all my experiences in life and in jobs, you know, whether it's in banking or in journalism or speaking, that I've been able to travel the world. And I think that's what I would have said to myself back then, like, you know, just do it. You know, I mean, just take opportunities when they come. Don't be afraid of what people think of you, or whether or not you're supposed to be the person doing something that you want to do. Just do it.
That's good advice. Yeah. Second part of that question, best advice you've ever received. Maybe that came from a trader or from a parent or a friend, or something that might stick out in your mind.
The following success secrets are only available inside the London Real Tribe, where you get exclusive access and insights from our high-performance guests on wealth creation, productivity, leadership, morning routines, health, and well-being. To join our tribe community, go to londonreal.tv/tribe. Now, let's continue with the show.
One of my managers, actually from here in London, I'm still friends with, who was at Bear, when I wanted to do everything. I was like, I want to do that product, I want to do that product, I want to grow here, I want to grow there, I want to, you know, I want to have my team be great at like doing everything, and I want to be involved in everything at the firm. And he was just like, break it down. Be really good at one thing and then add a thing. Be really good at two things and add a third thing. Don't try to do everything at the same time. Be sequential. and you'll figure out what you're best at. You'll figure out the timing of when you need to move into something, and it'll just work out.
It's really good.
Yeah.
Very good.
Yeah.
Last part to that 20-year-old that's watching or listening out there. You kind of grew up in this, bull market, in this current atmosphere around the world. Advice to them?
In terms of how a 20-year-old is facing the world today?
Yeah.
Honestly, I think it's similar. I think right now, people coming into the workforce have a lot less of a path than I think we had back around the same time, because things are just so uncertain, because they have so much more debt. I mean, there's a lot of positioning that people coming into their work lives right now have to deal with that could be weighing on them. But I think it's the same. It's the same advice that, like, if you can, take the opportunities that are presented to you. But also, I think today it's very important to communicate with people. Like, I think because we're so electronic and so social media'd out, and that's going to continue, that it's very important to have to create, when you can, personal connections, and to always have that as a part of who you are as you sort of go about your life, because I think we are in danger of potentially losing some of that. We've already lost some of that. And I think at the end of the day, being able to sit and talk to someone, or get on the phone and talk, just do something that's not 100% electronic, is differentiating, and it's just, I think, more connecting, and I think that matters. I think right now, for example, I was mentoring this woman who's getting into the workforce, and now she's got a resume on LinkedIn, which is where everybody has their resume now. And there's basically a system on LinkedIn where a job becomes available, and it matches electronically with the resumes that are out there, and you get an inbox, sort of notification, and then you can choose to put more information to that employer. And it's very cold, but it's how it works. So it's like you have to realize that's how it works. I'm like, I don't know, figure out a way to write them an extra, thank you. Well, I can, it's on LinkedIn. I'm like, look them up, figure out what their email is, and send them an extra thank you. Like continue to push the envelopes of what we've gotten rid of in terms of personal connections, just as you go forward.
Yeah, it's really good advice, and I agree. It's going to keep going that way, where people get to know each other via comments on Twitter, and we need to personalize it for sure. Yeah. Thank you for coming today. I really appreciate it. Your trading system is really impressive.
Thank you.
It's the 25-cent contract. There's a link below, or londonreal.tv/Nomi, N-O-M-I. Again, we go deeper into it, and people can learn how they can take advantage of it, use it, try it. And I would encourage everyone out there to experiment with an options trade, because it's a great way to learn about these instruments, learn about the markets, learn about yourself, and understand what all of these banks have been using for 10s and 20s and 30s of years. Right. So get on that. And again, get financially educated. If you're a female and watching this, take control. I think it's really important. Kim really sold me on that. You know, I just think it's good for everybody in the entire family unit or relationship. Everybody can be involved in the finances. Children too. Yeah. All that education needs to start early. So.
Yeah, absolutely.
You have so many books, but this one, Corrupt, is excellent. It's the most recent book. The rest they can find. Amazon is the best?
On Amazon, or just on my website, nomiprins.com.
Okay.
Yeah.
All right, fantastic. Yeah. So thanks for coming.
Yeah, thank you so much.
Really enjoyed talking to you. I know we've been to this for like a year, so.
Yeah, no, I'm glad it finally happened. And I, again, I want to say that, like, what you've done here and how you've moved from this environment that we both used to be a part of is really amazing. It really is.
Thank you, and it's been great to talk to you about like your adventure, because I had my version of that. I mean, you went out and wanted to get into creative writing, and then found this, and then I went out just broadcasting for the sake of it, maybe just to heal myself, and I've gone into this crazy thing. So it's nice to see that there's life after, and that anyone out there can take control of their situation no matter where you're at. There's never a point where you're stuck in a job or a relationship or in any kind of a bad mentality. You can always switch it up, and there's lots of examples of that.
Yeah, absolutely.
You're one. So thank you so much. Until next time.
Yes, thank you. I think that we're starting the beginning of a prolonged period now of a recession or even worse.
Hi, it's Brian Rose from London Real. I recently sat down with Nomi Prins, the former Wall Street trader you would have seen on Fox, CNBC, and Bloomberg Television. She regularly advises the Federal Reserve, IMF, and World Bank on important financial policy matters.
I've realized over the years that people don't have the same exposure to trading systems on Wall Street. And so I looked at what are some of the ways that I can create something that regular people on the ground can use to access some of what Wall Street does all the time.
We had an incredible conversation, but what really stood out to me is her brand new 25-cent contract strategy, designed to leverage a little-known market anomaly that happens every day around 10 a.m., if you know what to look for.
The more comfortable you feel with financial elements, the better you'll be at managing them, and the more confident and empowered you'll be in your own life in any aspect of your life, not just with respect to money.
Now, as a former Wall Street trader, I am super excited to share this investment strategy for the very first time. As the host of this episode, I'm able to offer you exclusive rights to a seat at her 25-cent contract live training. But you must act now to secure your spot. So click on the link below or go to londonreal.tv/Nomi, that's N-O-M-I, to secure your spot. And I will see you there.
I myself, my graduate degrees are in statistics and operations research, undergrad in math. So that was always, yes, my kind of angle into Wall Street relative to trading or sales, which was some of the other types of jobs on Wall Street. It was always about the math, the trends, the numbers, the securities, and how they behaved under certain conditions. And that's always what I looked at throughout my entire career on Wall Street. And I always also looked at the downside, not what happens if a trade works, but what happens if it doesn't work. What are the risks you should be looking for, and how can you best, sort of protect that investment for those risks? And so that's what they're a very cheap way of taking an investment into the market, particularly in times of volatility, that take into account what the big sharks are doing, that take into account why volatility is happening, and presents a way for a person to take advantage of that scenario in a cheap way, and in a fast way, and in an easy way.